Okay. So now the idea is that I'll give you a set of transactions, and then from these transactions we will prepare financials directly. We will not. The typical process of accounting is that the first thing that we always do is we prepare journal. Then once the journal is prepared, and we can think of this as simply recording of all your business activities, all your transactions. Once this recording is done, then we need to classify them, and this classification happens in a book called as ledger. Now once we have classified, ideally what I would like to do is, to my manager I would go to him and I would give him a final summary. So that summarization or that summary is done in a statement called as trial balance, okay, which is a list of final balances. So let's do an example. Let's say that first transaction was purchase of plant, okay, 1 lakh rupee. Okay. Before that, in fact, transaction number 0 is capital infused into business 5 lakh. Then transaction number 2, purchase of building 1 lakh. Transaction number 3, goods purchased or raw material purchased 1 lakh. Transaction number 4, sales 5 lakh. Okay. Now all these are my 4-5 transactions. In my journal book, I'll simply make a dump of it. So this is my book, journal book. The moment something happens, I'm going to write down into this particular book. Of course, there is a way of doing it. Okay, so we do something called as narration, but that's not required. What we need to do is, it's simply a dump of all the entries, so that you will have a record of everything with you. But then once I have done this, and now if I sit with this book, I do not know how much is what has happened to my cash, and I do not.
What is that purchase balance? Second one?
Purchase plant.
No, second one.
Okay, this purchase building. Building. Yeah, with my handwriting you better get used to it now. Then these transactions doesn't make any sense to me, because ideally I don't know what's happening to cash, what's happening to my plant. So I prepare one more book, which is the next one. I decide to classify. So now it's a big book with a lot of small pages inside it. Okay, and one page would be for each item. So what do I mean by this? Let's say cash. So I will designate one page for cash. Now what I'll do with cash is that if I receive some amount, I will write it on one of the side. And if I spend some amount, I'll write it on the other side. So now, capital, when I receive this, so 5 lakh I will write, let's say in this example, we will write it on the left side. So I'll just prepare it here, 5, on account of capital. Then purchase of plant, so when I purchase this plant or machinery, my 1 lakh will go out, my cash will reduce, so I will write it on the other side. Okay. Then building, again my 1 lakh will go, I will write it on the right hand side. Goods purchase, 1 lakh will go, I'll write it on the right hand side. And sales, 5 lakh will come in, so I will write it on the left hand side. So when I receive cash, I'm writing on one side. When I pay cash, I'm writing on the other side. So what I know is that throughout the year, I've received total 10. And throughout the year, I've spent total 3. So the amount of cash which is left with me as of now is 7. So then this particular box that I've prepared, will typically call this as cash account or cash ledger account. So in the same fashion, we will have a plant and machinery account, we will have a building account, we will have an account for each and every item, so that we will get to know what has been happening to that particular company. Now once I have done this classification, then finally, if I have to go to my senior manager and tell him that what's happening to the business, I cannot give him this cash account, because a big business will have a cash account of probably several thousand pages. So when I go to him, what I just need to tell him is how much is the cash left, how much are the assets left. Right? So I just prepare a final summary in which I would write down total amount of sales, this much, total amount of cash which is left with me, total amount of plant which is left with me, only the final balances. For example, cash here would be 7, which was the final balance. So in this fashion, I would write down all the final balances, and then this would be called as my trial balance. So recording, classifying and summarizing. Are we okay? Now once the trial balance are prepared, then I would go on to financial statements. and these statements would be three. Number one is your balance sheet, number two is your profit and loss account, and number three is your cash flow statement. Profit and loss account, we also call this as income statement. So what is balance sheet? Again, it's a big box with two sides. On one side we would write down all the liabilities that business might have to incur. On one side we would write down all the assets. And then what we would say is that the total of liabilities and total of assets always has to be same. And in accounting terms, we say that your balance sheet needs to tally. Tallying your balance sheet means that making sure the total of assets and liabilities are same. Now, what is the intuition? That why should the total of assets and liabilities should always be same? So there are two ways of looking at it. The first one is a mathematical logic behind this. What is that logic? That the way accounting process is developed, the person who invented accounting, what he said is, he said prepare two boxes. Okay. So if there is a transaction of 300, what you do is you write down 300 here and you write down 300 here. If there is a transaction of 500, write down 500 here, write down 500 here. If there is a different type of transaction of 200, which is to be written down here, but second you can't write it here, so some other area you say minus 200. Again the total is nullified. So in this fashion, I would make sure that total of two boxes is always same. And these boxes are in accounting called as debit and credit. Okay. So then this is the mathematical reason of why balance sheet should always tally. Second reason is logical. Now what is the logical reason? To these liabilities, we also call this as sources of funds. Okay. And to these assets, we call them as application of funds. Now, what you would appreciate is that if, let's say, through some sources, let's say like something like a bank loan or capital, I have generated cash of 100 lakhs. Then I will do something with this cash, or either I will keep it as cash itself. So this cash we typically would write down on the asset side because cash would be an asset. So then my sources are 100, my application is 100. If I decide that no, out of this 100 I want to purchase a building of 60, then my building would be 60 but my cash would be 40. But again my sources are 100, my application is 100. So there cannot be a scenario where your sources are more than the application or application is more than the sources. These two always have to be same as each other. So that's why we say that balance sheet is going to tally. So balance sheet is all about assets and liabilities. Now income statement is all about how much is the amount of profit that you've earned in a particular year. So we would write down all the incomes on one side, all the expenses on the other side, so that if my income is more than the expense, the differential would be my profit. Now one very important thing, that balance sheet is a final sheet which shows us balances of all the assets and liability. And what you would appreciate is that if my cash as of now is 500 on 31st of December, tomorrow morning if I spend money my cash would be less, or if I receive money my cash would be more. That means balance sheet is true only on that particular day, and therefore you will always read that balance sheet as at or as on a particular date. Balance sheet is true only on that particular date. Whereas profit and loss account, I would write down my sales throughout the year, my expenses throughout the year, and therefore for profit and loss account we say profit and loss account for the year ended. So profit and loss is typically for the entire year, it is true for one entire year, whereas balance sheet is true only on that particular day as at. Is this clear? Next one is cash flow statement. This would be a final summary of.
Am I late for that?
Yes, a bit.
What time is it?
7.
7 o'clock?
Cash flow statement is a final summary of, or cash flow statement is all about cash, that how the cash is generated, how the cash is put to use. So typically we would try to divide our cash into various categories, and we try to understand that if I have generated cash of 300 in this year, through what sources and how did I generate that cash? Did I generate it through sales or through taking loan or by sale of assets? Okay, are we clear with this? So I did this part again. So in case if you had not seen the videos and you were just bluffing, now at least you would have some background understanding. So now let's start doing some actual practice. Now I would be writing a few transactions and then I would be expecting you people to prepare balance sheets based on them. Transaction number 1, capital 1 lakh, bank loan 5 lakhs, purchase of plant and machinery 3 lakhs, purchase of furniture 2 lakhs. Prepare balance sheet for these set of transactions. There is bank loan, P&M is plant and machinery, L&B is land and building. Welcome to accounting.
Like
6 lakhs, yes. Okay.
Sir, I think that the capital is in 1 lakh.
Uh-huh.
So 1 lakh. So should we mean asset side or liability side?
Yes, we'll do this together now. See, this is how your balance sheet is to be prepared. Left side would be liabilities, and right side is assets. Why?
That's the format.
That's the format.
That's the convention.
It's a convention.
Yes.
Okay. In US, in fact, it's the other way around.
Other way.
Where assets would be on the left and liabilities would be on the right side. So there is no logic. Okay. Now, in accounting, we do something. Now he'll be a part of the video. Account marking would be a part of the video.
Can you not just like kind of run him never know, he'll not go?
No matter what you do, just
It's
if someone comes and parks there where he should, when it's not supposed to park, he'll park. You can't do anything.
So it's his class time.
Okay. So accounting is based on a principle called double entry system. Okay. That for every transaction there would be a corresponding entry of opposite effect. Okay. For every transaction there would be a corresponding entry of opposite effect. So what do I mean by this? Number one, capital. Now, what is capital for the business? So number one question is, what is the meaning of capital?
So both parties have owners of the business.
That at the beginning. At the beginning. Okay.
Contributed by the owners.
Yes. If I'm starting a business and if I deposit some amount into my business account, then that amount would be called as capital. Now the question is that what is capital? Is it a liability for the business or is it an income for the business?
It's a liability.
Liability.
It's a liability.
Separate entity concept.
Yes, a liability because of a concept called as business entity concept. That business is a different person and
Promoters are different.
yes, owners are different person. So when owner gives money to the business, business says that sooner or later I'll pay it back, and therefore capital is a liability. So now I'm writing down capital here, 1 lakh. But then the moment business incurs a liability, now it has got cash of 1 lakh. Right? So simultaneously, the second effect would be cash 1 lakh. Right? So what I did is we gave two effect of equal amount, one on this side, the other one on this side. And then of course after this transaction, if I try to tally my balance sheet, it would be 1 lakh, balance sheet would be tallied. Next entry, bank loan. Now what would be bank loan?
Liability.
It would be again a liability. So I write down bank loan here, 5 lakh. But then the moment I take bank loan, I generate an asset, and that asset is
Cash.
cash. So now my cash is how much?
6 lakh.
6. Again balance sheet tallies at 6 and 6. Next one, plant and machinery. Plant and machinery is a
Asset.
asset. So I would write down here. But now see the difference. That going by the logic of earlier two entries, if I am writing down 3 lakh here, I should also write down 3 lakh here. Right? But I would not now. Now I would assume that this plant and machinery is purchased on cash, and therefore my cash will reduce now. So cash will become how much?
3 lakh.
3 lakhs. Had I purchased this plant and machinery on credit, then I would have said 3 lakh here and 3 lakh here as a new liability towards that person. But since this is purchased on cash, 3 lakh here and 3 lakh here. Next one is furniture,
Asset.
2 lakh here
Minus 2
minus 2 lakhs, so this is now 1 lakh. And then I'll take the total 6 lakhs and 6 lakhs. And then to my liabilities, now I would call sources of funds. To my assets, I will call as application of funds. What you would appreciate now is that my sources are two, capital and bank loan. And how did I apply these assets? 3 into plant and machinery, 2 into furniture, and 1 into cash. Are we good with this? Should we increase the level?
Yeah.
First one, capital 5 lakhs, bank loan 5 lakhs.
Excuse me, sir. So double entry system is like you have to add, you have to make entries in liabilities and assets as well.
No.
Or on one side, then you have to make addition and subtraction. Suppose if we have to make entries.
Double entry means that there would be two effects of one entry. That's it. That how depends on the situation. So either you add on the both the sides, or you add on one side and also remove on the same side. Okay, at times it would be even different. So we'll see that. When we practice, you'll automatically start understanding. Land and building, 3 lakhs. Sales, 10 lakhs. Expenses, 4 lakhs. Now see, in the earlier case, we did not prepare a profit and loss account because there was no transaction of revenue nature. All transactions were of capital nature. Now we have revenue nature transactions. So you have to prepare both. You have to prepare balance sheet, you have to prepare profit and loss account. Is it done?
Something missing is time.
21 lakhs.
Time for assets and liabilities. Changing
टैली नहीं हो रहा है. See, someone once told me, sir आपके transactions गलत है, balance sheet tally नहीं हो रहा है. Transactions can never be wrong. No matter what transactions you take any transactions, your balance sheet always has to tally. And then if you understand everything in the session today, you'll go back. You will never have problem in accounting after this, provided you understand everything that I intend to pass on today. It's a very logical structure. It's like a software which is well made, so there would never be a bug because automatically it makes sure that everything is valid. You just need to understand the logic of the software. Yes, valid? Priyadarshi?
Total revenue is 6 lakhs.
21 is not
What is the
correct.
entry on this asset side?
How much, Anjali?
It has to be 15.
No.
No, 16 lakhs. 16 lakhs. What was the entry on liability? Asset side for.
How do you know it's 16?
This
Oh,
5
sorry,
is
I made a
capital,
typo
5 is
error.
building, and total revenue is just 6 lakhs.
No, I did typo
Expenses.
error. I mean, addition error. It's 16 lakhs.
Sales management expenses is 6 lakhs. Right? So this is whenever it's profit is
It's
liability.
16 lakhs. Profit is 6 lakhs. I did an addition.
So 5 plus 5 plus 6.
Alright, let's do this together. Now a balance sheet and a profit and loss account. Now see, capital is 5 lakhs. So capital here 5.
Cash 5.
Second effect would be cash
5.
5. Balance sheet is getting tallied. Now bank loan
5.
5. So bank loan 5. Second effect would be in cash 10. Land and building here R&B 3. Now cash is 7. Sales, where should I write?
Profit.
On the income side. So here we would write expense, here we would write income. So I would say sales
10 lakhs. Sales.
10. Will it have a second effect?
Yeah.
Yes, where?
Cash. No, sales. Cash from cash.
Revenue.
Sales will give you revenue.
When I make sales
You
of
get cash.
10, I receive
Cash.
cash. So now my cash would be
Cash.
17 lakhs. Okay. But now the question is that now my balance sheet is not tallying. In the earlier case, after every transaction balance sheet was tallying. But now it is not tallying. Why? Assuming that if the business stops here. Okay. Sales is 10, expenses is 0, so profit is
10 lakhs.
10. Now, as we said that in business entity, your capital is a liability. In the same fashion, profit of the business is also a liability because that amount needs to be given back to the owner. So if I stop the business, 10 would be profit and that profit would come on my liability side. So now the total would be 20 and 20 and then balance sheet will tally. Is this clear? But now I won't do that because we haven't finished the business yet. Okay? Now the next entry is expenses. So let's say salary expenses here 4. What should be second effect? Cash will reduce now. Cash will be 13. So now this is called as posting of entries. We have done that posting. Now what we need to do is called as finalization. Okay. So what do I do in finalization? How much is my total income? 10. How much is total expense? 4. How much is profit? 6. This 6 of profit I will take and transfer here on the liability side. On the liability, when the profit is transferred, we typically would call this as reserves. So now reserves are how many? 6. So now total is 16 and total is 16 and balance sheet would tally.
Profit is what categorized under any of the income tax expense.
No.
So at the bottom line.
Yes, it's a bottom line. Are we clear? You want me to repeat any part?
In the last example, we have taken loan for purchasing plant and machinery. Why not in this question?
Oh, because this business doesn't require plant and machinery.
No, like
Loan was taken.
land and building should be purchased by bank loan.
Why?
As in the other case,
Bank doesn't purchase anything. You have to purchase everything.
like why we have taken in the last question then?
No, we did not.
You are talking about expense and expenditure.
No, she's saying that why are we not purchasing
Why
plant and
we have used
machinery?
cash, not loan.
In the earlier case also we did not use loan, we used cash. Are we good? Okay. Let's try one more. Should I increase the level or will play at the same level for some time? Increase? Number 1. Capital 10 lakhs. Bank loan 40 lakhs. Now Anjali would be happy. Happy Anjali? Plant and machinery 15 lakhs. Land and building 25 lakhs. Sales 70 lakhs on now credit. Entire sales is credit sales, not cash. 6th, expenses 20 lakhs. Okay. Now see, I'll tell you a shortcut technique. It will tell you what should be the total of your balance sheet. If this is my balance sheet, I will have some liabilities here, some assets here. Total of both the assets is going to be same. So if I know the total of assets, I can know total of liabilities directly. So we start with asset. How many assets we have? Land and machinery, land and building. And then we will have one more asset which is cash. Cash. Or in fact even accounts receivable in this case. Money to be received from these people. But then with cash, the problem is it would keep on changing after every transaction. So it's difficult to calculate. So I go on the liability side. I will have capital, I will have bank loan, and I will have profit, which is my reserve. Capital is 10, bank loan is 40. How much would be profit? 50. So 50 plus 50, 100. Balance sheet total has to be 100 and 100. Okay. So I'll reverse integrate this balance sheet. Now I know the total is 100. I know bank, plant and machinery is 15. Land and building is 25. Accounts receivable is 70. So accounts receivable is 70. How much is this? 15 plus 15, 100. That means cash balance is going to be 0. Here, capital 10, bank loan 40. What is 110?
The total.
50. No, this is 15. Oh yeah. Oh, that means, okay, now this is a bit tricky. On the liability side, in fact, now we will have 4 items. One is capital 10, one is bank loan 40, one is profit 50, and then now in this case the tricky thing is that I am spending more money than what I have. See, how much money do I have? 50 here. Okay, and how much am I spending? 25 plus this, 40 plus 20, 60. That means I am spending more money. So typically in business terms we would call this now as bank overdraft. Right. Add OD account, I have withdrawn more, so then this should be 110. So this was not a good example to do this logic.
Sales could be considered as
Sales could be considered as?
debtors.
Yes, debtors. Let me just change one of the amount so that it would be easier for you. Let's make bank loan as 60. Okay, and now prepare balance sheet for that. Have you understood the logic what I was trying to say? So let's make this as 60 and prepare balance sheet now. Done. You can tell me when you're done. I was enjoying our articles by Google. Okay. This is my balance sheet. This is my profit and loss account. Transaction number 1, capital. Capital 10. Second effect, cash 10. Bank loan 60. Cash 70. Plant and machinery 15. Cash 55. Land and building 25. Cash 30. Sales 70. Now this is an important one. It does not matter how much is cash, how much is credit. Entire 70 goes here. Had this been cash, I would have added 70 here. But now this is not cash, so I will show accounts receivable. Same side, 70. Next effect, expense 20. So expense 20, cash 10. Profit 50. Yes, transfer to liability. Let's call this as reserve. Total 120. This total 40, 120. Yes. Balance sheet tallies. Okay. Again, we could have done this orally. We could have said my profit is 50 and my other liabilities are 70. So left side total should be 120. And then right side total has to be 120. Want to ask anything, Priyadarshi?
Actually, profit loss statement that you're making, whatever I have seen is just one column and we put expenses and break the bracket.
We'll go there. We'll go there. There are different formats. First, understand the logic. This is easier to understand in a box format, and then we'll look at different presentations.
For expenses, how are you showing it in the balance sheet? Where you're deducting cash.
Cash.
Why about 10 lakhs for? Why about 10 lakhs?
Originally you had 10 plus 60, 70. 70 minus 40, 30.
No, 50 and 55 it's okay. We came to
See,
55.
look at this. 10 plus 60, 70. 70 minus 40,
30.
30. 30 minus 20,
10.
10. Should we move on? Capital 10. Bank loan 90. Building 50. Depreciation on building 20%. Sales 100. 50% cash. Salary 50. 60% outstanding. prepare profit and loss account and balance sheet. Again, we can do this orally now. That on the left hand side, what will I have? I will have capital 10, bank loan 90. Then I will also have one more liability, which is outstanding salary of employees. Right, so how much would that be? 30. So outstanding salary 30. And how much will be my profit? Depreciation expense 10 and this expense 50. So 60 minus 100, this should be 40. So total would be 170. Try doing it and see how you get it. You try doing it on your own and then we'll prepare it completely.
Depreciation, you're adding an expense. The cost of, the assets, like machinery depreciates and the land, the file depreciates. So we don't change the balance sheet. We just put it as expense and income.
We show it on the balance sheet as well as expense both.
So the balance sheet we put building is 50 itself, right?
50 minus 10, 40.
We put 40.
You haven't seen the video, is it? Have you seen the video?
Yeah, I've seen it.
Don't
Take
take
it
it.
as
Done, Rohit. Anjali.
We get basic questions on this.
Hmm?
Do we get basic questions on this or analytical questions on accounting?
Oh, on this there would not be any question. But if you don't know this, you won't be able to answer a single question. So knowing this is very important.
Then in profit and loss statement, in expenditure, we have to write the whole 50 or we have to write 40 and 20 and 30.
whole 50. We follow a system called as accrual. It doesn't matter how much cash is received or paid. What matters is how much expense is incurred, how much income is earned. Should we do this together? Let's do this. It's a bit tricky, be careful here, understand this. And if you understand this one, I'll take you to the next concept of debits and credits. Okay. This is my balance sheet. This is my profit and loss account. Transaction number 1, capital. Capital 10, cash 10. Next one, bank loan 90. Bank loan 90, cash 100. Now building 50, though there is a depreciation that would come at a later stage, as of now entire building I would show on the asset side. Second effect, I will reduce cash by 50. Now why building is not an expense, why is it an asset? So how do I decide what is an expense, what is an asset? The simple thumb rule is that when I purchase or when I spend some money, is it going to help me immediately, only immediately, or is it going to help me immediately as well as in years to come? Right? Is it an economic resource that I will have? So if it's something that is going to help me for years to come, it's an economic resource, we would show it as an asset. And then we would say that this is my capex, capital expenditure. But if this is something that I will consume immediately with no future benefit, then it would be my revenue expenditure. So there it would come on the expense side. So in this case, building as an asset, 50 here. Second effect, cash we have already reduced, 50. Now the entry of depreciation. Okay. Now understand this. When I have spent this 50, is it that I can use this building forever? No, because every asset will have a limited life except land, where land will have a indefinite life, right? So now with building, let's assume that life of this building is 5 years. After 5 years, automatically the building would be worthless, an assumption, which means that every year I would be using building worth 10 lakh rupees, so that 10 lakhs, at the end of 5 years value of building is 0. So what I do is that I would say less depreciation, that by the end of the year I have already used building of 20 lakhs. Now the value of building which is left with me is only 30 lakhs. And then second effect, I would say depreciation, that means consumption of building 20 lakhs here. Sorry, I have calculation here. 10, 40, then this is 40. Is this clear? Oh, yes. Is this clear now? Are you understanding what we are trying to do here? That every year I will reduce. Next year my value of asset would be 40. Then I would say less 10 again. So that asset will be 30. Depreciation would be 10 again. Next one.
But how will it show in the balance sheet? In balance sheet also the depreciation will show building equals to this less depreciation equals to
Yes.
this. And then we will say building final amount as
Yes.
also. That's
Correct.
how to-
Yes. Next one is sales. So I would write down sales here. Amount is 100. Now see, a lot of people have this confusion. I said double entry system, right? So people would say that means there are 2 entries. Now in this transaction there would be 3 entries. So what double entry means is that there would be equal amount effects. Okay. So here I have given effect of 100 on the one side. Now I have to give effect of 100 somewhere else. So I would increase my cash by 50. So cash will be 100. And then accounts receivable would be 50. So though it's double entry, it doesn't mean there would be only 2 entries. What it means is that if I pass one entry of 100, I'll have to give second effect of that 100 somewhere. Okay, but total amount has to be 100 for the second effect. Then next one, salary 50. Again, it doesn't matter how much cash is received. Entire salary I will show it as expenditure. So salary 50. But how much of this has been paid in cash? 40% means 20. So I will reduce my cash by 20. So now cash is 80. Then the amount which has not been paid in cash, that is a liability. We will call it as outstanding salary. And outstanding salary would be how much? 30, which goes on the liability side because I'm supposed to pay my employees now. Okay, so now my profit is how much? 40. So I put that 40 here as a reserve. And total how much? 170. The total is how much? 60. And 60 and 50 is 110. More 40 plus 50, 90 plus 80, 170. We had calculated the same earlier. Is this clear? Any doubts? No?
We have calculated less depreciation, right?
Huh?
So, we don't calculate the appreciation value.
No.
Suppose we have planned.
Okay, good question. Alright. Oh, I cleared it. It was okay. See, in accounting, depreciation is not opposite of appreciation. Okay, it's a very important point. Depreciation is not opposite of appreciation. That's one. And second, we do accounting based on a concept called as historical cost. So we typically call it as historical cost accounting. So understand what it means. This is my balance sheet here. Okay. Let's say that my capital is 100. I had cash of 100. With that, I decided to purchase a building of 100. Okay. Now, my purpose of buying this building is to use it for my office purpose. Let's say I'm a consultant. Now, I can use this building for 10 years. In 10 years, for some reason, let's say the building would be demolished. Now, what I decide is that over the period of 10 years, I want to make the value of building as 0. So, by the end of year 1, what I would say is less depreciation 10, value of building is 90. Okay, and there would be some effect somewhere so that it would be tallied automatically. Okay, so let's not focus on that, let's focus on this thing. Now, at the end of year 1, value of asset in my books is 90. I go to market and I figure out that in the market now, this building has become worth 150. This 150 is the market value which is today. Tomorrow it might be 151. After a day it might be 149. I do not worry about what is the market value of these assets. Once I purchase an asset, whatever cost I purchased it for, that is my historical cost. And that asset would always be on my balance sheet at historical cost minus the depreciation. Right? So we ignore the fluctuation in the market prices. We call this a historical cost. So if you take balance sheet of a company and that company has got some asset, not necessarily that value of that asset in the market is the same what is written in the book. In fact, the market value of the assets and the actual value of the assets would be significantly different.
So, but in that case, how will the investor come to know?
He would not. Yes, he would not get to know that what is the true value of assets in the market, and that's why your and I picture come in, right? As yes. So that's where our role comes in. That we need to analyze and tell them that this company is good, this company is not good.
So in balance sheet, they are always on the book value.
Yes, balance sheet is always book value or acquisition value minus the depreciation.
And if you sell this thing, like sell these assets like building, and if you just sell the building.
If you just sell it, then of course, let's say in my books it was 90, I sold it for 150, 60 is my profit. That's it. So my cash will increase by 150, my building will become 0, 60 will be my profit. Is this clear? Saurabh? Okay. But now a heavy concept. Okay. This concept is originally was called as Debre and Credre. Debre and Credre. Today we call them as debit and credit. Okay. Does anyone have a chartered accountant friend here? Do you have a CFA? Does anyone have a friend who is a CA? No. Do you have a friend who's got some knowledge of accounting? Go to those guys. I'll tell you a trick question. You can go and ask them. That is accounting. To debit, we typically call this as debit, DR. It's a shorthand. And for credit, we call as CR. So you go and ask them that fair enough, credit, CR, that's why we call it as CR. Okay. Debit, there is no R, okay. So why do we call it as DR? And we call it as DR because it is actually Debre and Credre. So you can just go and have a little bit of fun with these guys. They won't like your question much. It's a stupid question. Anyways, now see, the way I classify is slightly different than what is written in the textbook, but it will help you understand. It's an easy way of looking at it. When I spend cash, spend money, and when I receive money, it's the easiest way to understand this. Okay. So when I spend money, we typically call this as debit, and when I receive money, we would typically call this as credit. Now, when I spend money, I will spend it for two possible reasons. The first one is that I am incurring an expenditure, let's say salary, so it would be an expense. And other possible reason when I spend money is to buy a asset, yes, machinery. So either to buy an asset or to make an expenditure. When I receive money, again two possible reasons. One is that I have earned some money, so it's my income, or I have incurred a liability, I have taken a bank loan. So now all the liabilities and income items are of credit nature, and all the expenses and all the assets are of debit nature. Okay, remember this, all the expenses and assets are of debit nature, and all the income and liabilities are of credit nature. Okay, so what do I mean by this? That when a liability increases, it has to be a credit entry, and when a liability decreases, it has to be a debit entry. When an asset increases, it would be a debit entry, and when an asset decreases, it would be a credit entry. So you first figure out what is the nature of this, and then once you know this, then the life would be relatively easier. Okay, and now see the beauty. If you get hold of this properly, you will not have trouble in accounting for the rest of your life. Why? If you know one transaction, okay, give me any transaction, whatever transaction you feel.
Bank loan.
Bank loan. Okay. So bank loan increases. It is what? Liability. So liability increasing is what? Credit. So liability increased, my credit increased. Now to offset credit, either I need to decrease some other credit or I need to increase some debit. To offset credit, increase in credit. To offset this, there would be two possible ways of doing it. Either you increase your debit somewhere or you decrease your credit somewhere. So capital, my credit increased. Second effect was what? Cash increased, and cash was what? A debit. So a debit increased. Is this clear? Yes, any other entry?
Land and building.
Land and building. So again, land and building is what? A debit. So a debit increased. Second effect was what? Cash reduced. So other debit decreased. So an increase in debit, you can make this flowchart. An increase in debit is to be compensated with either an increase in credit or decrease in debit. A decrease in debit is to be compensated with either a decrease in credit or increase in some other debit. Is it very complicated? It's fairly straightforward. That if a debit is increasing, corresponding a credit need to increase, and if not, some other debit needs to decrease. If a debit has decreased, credit needs to decrease. If not, some other debit needs to increase. Clear? Let's go on to the credit side. If a credit is increasing, to compensate this, tell me now what should increase? debit needs to increase, or some other credit needs to decrease. And if a credit is decreasing, then debit needs to decrease, or some other credit needs to increase. That's it. So if you know these four things, your accounting is done. That's it. This is the logic of accounting. Are you done writing? Done writing? Okay. Do it fast, do it fast. Okay. Now see, this is my balance sheet. Okay. This is my profit and loss account. This side is liability, this side is assets. This side is expense, this side is income. Can I say this is credit? This is debit? And then the logic that we are using, total of credit and debit needs to be same. This is debit and this is credit again. Okay. See, what we basically do is, I'll give you a few transactions now. Okay. Now we'll look at it from a debit credit perspective. First one, capital. Increase in credit, let's say 10 lakhs. Second effect, increase in a debit, 10 lakhs. So capital 10, cash 10. Plant and machinery, 5. Increase in debit, 5. Second effect, decrease in some other debit of 5. Again it tally. Now see the beauty here. Let's assume sales of 30. Okay. So now sales of 30. It's an increase in credit. Right. So second effect should be what? Yes, to increase in credit, second effect should be increase in debit or decrease in some other credit. So when I make sales of 30, second effect is my cash increases. So cash becomes 35, increase in debit. Are you following this? Making sense? One more. Let's say, now I'll make this a bit tricky. Let's say that you have to pay salary of 50 lakhs. But 60% was outstanding. Previous example. Okay. Now salary is what? Expense. So salary 50. Now see, I'm writing this. My debit has increased by 50. To compensate debit, some credit needs to increase or some other debit needs to decrease. Now see, what effect I will give? Salary increase, salary 50. Second effect, my cash has gone out how much? 60% was outstanding, so cash gone out was 20. So I am reducing my cash now by 20. So now this is how much? 15. So can I say decrease in debit was 20? Yes. Now remaining 30 is what? Liability? So we will say outstanding salary 30. Is it an increase in credit? Yes. So, and that's the whole logic. And see what I do at the end of the year now. Okay. Let's do one more sales entry for simplicity. Let's say sales 100. And then second effect, I would say cash 150. Now see, that total of debit on this side is 50. Total of credit on this side is how much? 130. So how much extra credit do I have here? 80. I have extra credit of 80. We call this as profit, and that's why profit is always a credit balance. And then to this extra credit, I will take it and I will transfer it here. So I will transfer my credit balance here. So now I will say profit 80 on the credit side. That means excess of credit or debit from this statement I transfer to this statement at the end of the year, so that total of assets and liabilities are same. Is this clear? Okay. Last balance sheet now. Capital 10 lakhs. Bank loan 50 lakhs. Interest on bank loan 20%. Plant and machinery 30 lakhs. Depreciation 20%. Sales 100 lakhs, 50% credit. Salary 70 lakhs, 50% outstanding.
Prepare for loss expense.
Okay.
So on the asset side, for this interest, can we directly reduce 10 lakhs from the 60 lakhs?
With 60 lakhs. Cash?
As an interest.
Yes.
On the assets.
Cash जाएगा ना, but when you pay interest to the bank, your cash will reduce.
Yes.
Is it 190?
119. Stupid. I think 109 would be better.
109.
salary which has been given, it should be on which side?
Half of the salary is given, half of the salary is not given. That would be the total. 109, 109.
80.
For every debit, give corresponding effects. Go back to your flowchart and see if it works. After the MBA in finance, it should be on your fingertips. If not, then I should ask you, what do you do in 2 years?
Interest on bank loan will be a liability, right?
Expense.
Will
I'm saying having both from it.
now it becomes simple.
Should we do this together?
Okay, 109.
I
didn't account for interest.
See this, now I'll make the entries and simultaneously we'll also prepare flowchart for each of the item for debits and credits. So, this is my balance sheet and this is my profit and loss account. First transaction, capital. Capital is a liability. So capital 10, second effect, cash 10. So I'll make a flowchart for this. That increase in credit because capital was a credit. Second effect, it was compensated by increase in debit. So increase in credit, increase in debit, it tallied. Next one, bank loan 50 lakhs. Again the same logic, bank loan 50, cash 60. So increase in credit, increase in debit again. Cash increased, bank loan increased. Interest on bank loan 20%. Now what is the interest? Interest is a expenditure. So you would say interest 10 and expense is what? It's a debit. So my debit increased by 10. My debit increased by 10. Now what should be the second effect? Cash reduces. So now cash would be 50, decrease in another debit 10. So increase in debit can be offset by increase in credit or decrease in some another debit. Are we clear? Next one. Plant and machinery 30. So I'm writing down here plant and machinery 30. Second effect, cash will reduce to 20. So again plant and machinery was a debit item. So one debit was offset by decrease in another debit because my cash reduced, it became 20. Depreciation 20%. So depreciation is an expense 6. And second effect, the value of asset will reduce, it will become 24. So now again an increase in debit was offset by decrease in another debit which was my asset. Making sense? Yes. Next one. Sales 100. So sales 100 here. So my credit has increased by 100. I have to give now effects to this. 50% on credit, that means 50% in cash. So now cash will be 70. So now I make this as cash as 70. So increase in cash was 50. So increase in credit of 100 is compensated by increase in debit of 50. I have to take care of remaining 50 now. What is my remaining 50? Accounts receivable. So accounts receivable here 50. So then total increase in debit becomes 100. Right? 50 in cash, 50 in accounts receivable. Next one, salary 70. So you would say salary 70 here. So now increase in debit again, salary 70. Now how much cash is going out? 35. So now amount of cash balance would be only 35 with you. So you decreased one debit for 35. Now remaining 35 will be your liability. So we will call this as outstanding salary. 35, liability is a credit item. So increase in credit 35. So we have given equal amounts of debit and credit everywhere. Now final profit. Profit would be 14. This excess of credit. Profit is what? Excess of credit balance. I will transfer to balance sheet. Reserve 14. 60, 95, 109 here. 74, 74 and 79, 109 here. Balance sheet tallies.
Sir, when we increased cash from 70 to 35,
So
what corresponding change we made on the liability side?
No, the original entry was increase in debit of 70, which was my expense. I had to give offsetting effect of 70 somewhere. So what I did was I reduced cash by 35. So my debit decreased by 35.
Yes.
And then how about remaining 70? 70 यहाँ पे था, 35 हो गया और 35 का effect दे रहा है ना. So what I did was I created a liability 35, which was increase in credit, outstanding salary here.
जी सर, आउटस्टैंडिंग सैलरी समझ गया, लेकिन ये 35 आपने जो पूरा कर दिया है सैलरी को 70 से आपने 35 रिड्यूस किया सिंस यू हैव पेड दैट सैलरी.
हाँ.
सो उसका लायबिलिटी साइड पे क्या इफेक्ट है, यानी कहाँ पे 35 रिड्यूस कर?
ये क्या है? रिड्यूस नहीं कर रहे हैं हम लोग, दिखा रहे हैं लायबिलिटी. सैलरी आपका सैलरी आपका लायबिलिटी नहीं है. सैलरी इज योर एक्सपेंडिचर. सो ये यहाँ पे 70. इसका सेकेंड इफेक्ट कैश रिड्यूस होगा और लायबिलिटी बढ़ेगा. Are we good? Huh? Yes, no, maybe?
Yes.
Okay. I don't feel very confident about you guys yet, but I'm giving it a shot. Now I'm going to show you a balance sheet of a listed company, right? But before I do that, just do a little bit of terminology. How we've learned as of now is, we said liability is on the one side, asset on the other side. Okay. If I flip it this side, that means if I just turn the side of the box, then liabilities would be at the top, assets would be at the bottom. So then this particular format would be called as vertical format. Okay. Or at times we also call this as report format. And this particular format was horizontal format. Okay. So this is more in theory and it's easy to understand, but this is how most of the corporates would prefer to prepare their balance sheets, right? So when we'll be reading balance sheet of a company, it would be from this perspective, that liabilities would be written first, assets would be written second. Now to liabilities, they will not call liabilities, they would say sources of funds. And to assets, they would call it as application of funds. Is it clear? Now, one more thing. Okay. What I'll do is I'll prepare a horizontal balance sheet. Okay, before that I have to do a concept. Now, let's say you start a new business and you invest 100 million. See, I was in MBA college and avoid the name. And I was giving this example, so I said invest 100 rupees here, 200 there. So suddenly one guy got excited. He said, "Sir, ये क्या पान टपरी का बैलेंस शीट बन रहा है?" So I said, उसके आगे ऊपर लिखो रुपीज इन मिलियंस. So फिर टाटा का बैलेंस शीट बनेगा. So 100 here, you invest 100, and then you invest this in two parts. 90 you invest into your building, and you invest into your machinery. Okay. Remaining 10 you keep in cash. Why would you like to keep amount in cash? To take care of routine expenses. Right? So this 10 in cash that you've invested here, this is called as your investment in working capital. This is what working capital is. Is this clear? That this 10 that you decided to just have in cash is your working capital. But this 10 will always not remain in cash because you have to use this somewhere. So now let's say that out of this 10 you decided that I will purchase raw material of 5. So now your cash is only 5 and you have inventory of 5. Now you have 5 cash, 5 inventory, but then you would process this inventory sooner or later and then you would sell it. So now let's say your inventory is only 2, okay, and you have 3 of debtors now. Why debtors? Because you processed your inventory and you sold it, and now you are supposed to receive your money. Now all these 3 assets that we have here, cash, inventory and debtors, these assets are typically called as current assets. Okay, and generally all other assets we typically call them as fixed assets. Why? Because when I have a building, my intention is not to sell that building and earn money. My intention is to use that building. Whereas here with these assets, my intention is to convert them into cash as quickly as possible. So cash, inventory and debtors are your current assets. So then can I say at this stage that working capital is nothing but my current assets? Working capital is nothing but my current assets. Now let's say that next day you meet a vendor, okay, and what he says is that now I'm willing to give you some inventory on credit. Okay, so when you take something on credit, those are your accounts payable or creditors. And let's say he gave you inventory of 10. So now total inventory that you have is 12. What is total of your current assets now? 20. 17 plus 3, 20. And you have this liability of 10. Now my question is that what is your investment in working capital? Is it 20 or is it 10? My investment in working capital is how much? 20 minus 10. Why? How much money did I invest originally? 10. So now my working capital is still 10. Though my current assets are 20, but some of my current assets are actually funded by these guys. So how much did I invest? Only 20 minus 10. So therefore we say that working capital is equal to current assets minus current liabilities. Understood the logic? What is the intuition behind this formula? That some part of my liability has been funded by these guys. Some part of my current assets have been funded by these guys, and therefore I need to reduce that amount. Which means that accounts payable is called as current liability because I am going to pay it very, very quickly. Are we clear with this? Okay. So assuming that you've understood, now I will show you your first vertical balance sheet. Let's say capital 100, bank loan 500, accounts payable 300, cash 500, accounts receivable 200, this was 900, and you have a plant of 200, this is again 900. This is a horizontal balance sheet. Now I would convert this to vertical. I would say sources of funds. You can see this beautifully, carefully. Capital 100, bank loan 500. Now I would not write down accounts payable here. I would say total sources of funds are 600. and then I would write down application of funds. And how did I use this money? Plant 200, working capital 700 minus 300, 400, 600. So I do not call accounts payable as a source of fund. What I say is that how much is my net working capital? 400. So source of funds 100, 500, 600. Application of funds 200, 400, 600. Are we clear?
How do we arrive at 400 figures?
Current assets 700, current liability 400, 700 minus 300 is your working capital 400. Are we okay with this? So now we are all set. कौन सा कंपनी का देखना है? Show my favorite. I get to choose today. So this is the balance sheet. Sources of funds and application of funds. Total sources 35,118. Total application 35,118. Balance sheet tallies. Okay. What are my sources of funds? First one is share capital. Then these things you think of this as some part of share capital itself. At this stage, it might be a bit difficult to understand this terminology, so don't worry too much. But these are nothing but share capital, just different disclosures. Reserves we learned today. It's nothing but profit which is taken on the balance sheet. And revaluation reserve is also a profit, but it's a special type of profit. So this entire amount collectively is called as net worth. The amount of money that belongs to the owners of the business, the amount that they originally contributed, an amount of profit which has been reinvested into business. Okay, so total capital of the company is 25,223. At times, to this capital, we simply refer to this as equity. Okay, so capital, equity, same thing here. Now, you have your secured loan and unsecured loan. Secured loan means that I have given some guarantee. Unsecured means there is no asset which is specific. Total amount of loan is this much. So total amount of money contributed by owners 25,000. Total amount of total amount of loan taken about 10,000. So total of the sources are 35. What is the application of these assets? This net block that they have written it, this is nothing but fixed assets. Okay, just a different nomenclature for them. So net block are your fixed assets. So about 7,000 in fixed assets. This 807 capital work in progress is nothing but fixed assets again, but a different type of fixed asset. We will learn that slowly with time. Investments 15,000, and then you would be able to see here inventory, debtors, cash, total current assets. Okay, so current assets minus current liability has given them net current assets, to which we called it as working capital. So working capital 10772. And then total assets 35. So now see the big picture. Big picture is total liabilities are 35,118, which have been derived as 25,223 as the owner's contribution and 9,895 as the debt. And how is this money used? About 7,000, or even if I add this, about 8,200, 8,200 into 8,400 into fixed assets, 15,000 into investments, 10,000 into working capital. So that total of your assets are 35,118.